Hello, everyone. Good evening, guys. How is everyone doing today? I hope you are doing well. I'm just trying to get connected on the YouTube live just to make sure everything works properly on YouTube because we want to do live stream there. I think we are streaming now on YouTube. All righty. So, how's everyone doing today? Yes, everyone is doing great. Ricardo said good evening. Hello, Ricardo. And let's change the screen. I think that's better. So, Ricardo, yes, from Switzerland. Before even I asked, you guys are telling me now, where are you watching us from? Perfect. Ricardo said, pretty well, thanks. What about you? I'm doing very well too. Jerome said, good. Just jump to Bitcoin now, cause that made me cry. Went long at 68K. Okay. You went long on 68K on the Bitcoin. Omer said, good evening, doing great. Fantastic. Nice to have you here. Kenneth said, super, thanks from Sweden. Brilliant. Marios from Greece. Marios, your surname says that you are from Chris, my friend. Great to have you here. Mario's iPhone 14 from Nigeria. Fantastic. Bozidan from Serbia. Previous week was insane. Hope next week it's even better. Wait, we have another 3 major banks reporting interest rates this week. Ricardo said, I'm waiting for Bitcoin to sell. Okay, Omer said from UK, Zoom user from Lithuania, and Steph, hello from Scotland. We have people from all over the world, and that's amazing. So, guys, let's kick in. And anything you want to ask, please just put it on the chat there. So, another weekly market insights here at Elevating Forex, and we are really excited to have you on another webinar just for education purposes only, and there is no intent to provide any personal financial or personal advice here on this webinar. So for those who see me for first time, my name is Theo. I'm originally Greek Cypriot, and currently I'm located in Cyprus. As for my expertise and experience in the field, well, I'm a certified financial technical analyst and a certified market technician. I trade for more than 10 years now, and I love the currency trading, to be honest, because it has for some people, it's kind of a mystery, but it's something very simple once you understand how really the correlations between each currency works, then you're going to be very well in trading currencies and, of course, indices, commodities, and so on. So a little bit about myself on a daily basis. Besides my trading activity, I also conduct market analysis for different industries, either they are hedge funds or trading firms, prop trading firms. I mean, I create educational courses for investing and trading, and I'm trying to finally find some times throughout the week to finish my course as well, and I will make it available to you guys. Of course, I published some articles in magazines, and I conduct many webinars, trading webinars actually, with Steve Nilsson, John Bollinger, and other guys there. Okay, so enough, Theo, enough. We want the charts. Bring us the charts. So other comments here. Laxmikan said, hi, this is Mishra from UK, just blown my account. Anyway, it's trading. We'll start again. Nice to be here. Great to have you here, guys. Just be a little bit careful with how much you risk. Especially if you are new to trading, you can send us some messages and just to give you some guidelines on how much to risk per trade, actually. Steph, what's your input about gold with news coming up? And second, Euro USD, think Euro going to boom, giving fat Euro 24 is happening. Thanks. So let's start with the Euro against the US dollar. Guys, I always like to do some reference on what we said the previous week, because that's how we just keep the puzzle going, and we put the pieces together all the time. Last week, the week started from here, when it was, that's Tuesday, started from here. Okay, and last week we saw that 2 weeks ago, we saw the market was going down, and we said that we have this fair value price at this point here. And you saw that the market entered into this fair value price, bearish engulfing here, and it sold off for the whole week, actually. Okay, so last week we were pretty much selling the euro. There were some buying activities around the support and around these areas, but that's okay. But in general, the market now it hits down. So at this point here, there is some bullish price action that can push the price a bit higher beginning of next week. So in few hours, actually, when the market will open. And what we might gonna see, we might gonna see a retracement, yes, but until where? Traders, they have that habit to always want to buy the retracement like this, but you have to, and it's okay. That's one of the best strategies, actually. We call it mean reversion in currencies, and it's a great strategy, but if you know how to apply it, okay. So the price, yes, might gonna find some support here, and it's gonna move upwards to fill up this gap here, most likely. But is it gonna continue to come all the way to the moving averages and perhaps more, or it's going to find resistance here at this area, or if it's going to penetrate that to find resistance at this area? So because that's a question that all traders pretty much, they are asking themselves, okay, when enough is enough? I bought here the euro, and when enough it's enough? So you have to understand the mechanism. The first thing you have to understand is that if you are a buyer at this point, guys, you need to know that, hey, there is a resistance that built it last week here. And as retail traders, we don't know if the price will surpass that resistance, if the price will penetrate the resistance and it's going to increase. Therefore, we have to either close the trade right here and wait to see for another information to either re-enter or to go short, to sell, or we have to close majority of the trade to take out some money. We have, let's say, if we risk whatever we risk, to take something out of the table, okay, move our stop loss to break even, and we let the market to show us if it's going to break and it's going to move upwards, we're going to make a little bit more. If not, then it's going to come to take the stop loss. So you have to understand, and that's a deep emotion actually in trading. What I explain is what we expect to happen next week, but what it's difficult, the trader find it difficult actually to execute and manage the whole situation while they are in the trade. I hope this gave you a bit of clue and a bit of understanding of how to behave while trading. Okay, so primarily the euro US dollar, it's in a downtrend. This is the 4-hour chart. Market makes lower highs and lower lows. There is also a trend line that can be drawn here, as you see. So the market, either it's going to come here and it's going to decline, or it's going to come here and it's going to decline, or it's going to come right here and it's going to decline. So apply what I just explained the last few minutes, and we don't need to capture all the move, guys. If we get in with a 10 or 20 pip stop loss and we get 2 to 1, 3 to 1, I mean, that's enough, okay, at least to start with. And you have to understand, you are not, and I'm not, the market movers, the market creators, the market makers. So we have to accept that, okay, and not trying to squeeze every pip out of the move, because we don't know which one it's going to be. So guys, Any questions so far? Steph said, thank you, got the idea, nicely put. Thank you very much. So I hope everyone agrees with Steph. Next one, Great British Pound and the US dollar. Now, it's good to tell you that next week, and I think on Thursday, the Bank of England will report interest rates in the UK, and they expect to keep the interest rates unchanged. And if from memory, I think it's 5.25 or 35. Excuse me, sorry for that. One of the two. It's 5 point something. Now, there are 9 members of the committee that they vote for the interest rate changes. Out of these 9, 7 they want interest rates to remain the same. 2 they want rates cut. But the forecast show that we're going to have unchanged interest rates. Also, retail sales in the UK will be reported. They expect it to be bullish. Only the CPI in the UK is expected to drop. But again, if the interest rates will increase, it's going to pretty much give some boost to the Great British Pound. Now, this is the 4-hour time frame. Here it's an area. We can treat this as a zone because there are a lot of wicks here, and it's an area of support. Now, here it's, again, very difficult from the trader to understand and apply basic things. The price currently it's at support. I want you guys, this, if you understand this, what I'm going to just explain now in the next 1 minute, okay, maybe 2 minutes, okay, it's going to give you a whole clarity in trading. Please pay attention to this. There is a support zone here. Why it's a support zone? Because 2, 3, 4 times the price touched on this area and moved away from this area. I want you guys to understand, and at this point, I'm sure everybody understands. Now, pay attention to this. How can we get an idea if a support level will hold after the price visits it, after the price enters that support, or if the price will go through and penetrates that one? Okay, so first we have to look on the left. The price is currently here, and we are wondering, should we buy this support? It's a nice reversal price action. Do you guys see that? It's a nice reversal price action here. So should we buy this support or not, and why? First thing you have to do is to look on the left and see how price behaved the last few times it tested the support. This is going to give you the answer. The price, dear friends, the last time it touches the support and immediately it bounces off and moves upwards. It moves away from the support. Here, the price touches the support and in 2 candles, it's exploded. It moved away from the support. The same with this one here. Price touches the support, move away. Same with this one. Bullish engulfing. Price touches the support, bam. Goes away from the support. But hold on. What's going on here? The price touches the support without reversal price action like here or like there. And then it penetrates the support and it put a reversal price action here. Now, if we're going to enter, and here is what you need to be always aware of. If we're going to enter long at the support, dear friends, actually, I like the word dear friends. Okay. So I better address you that way, yeah, instead of like everyone. So if we enter long here, it means we buy the market. And in the next 2-3 candles, the price remains within this area and the price doesn't move away from the support, there is a high probability that the buy orders or the buyers are not going to take over. Therefore, most likely, the sell orders or the sellers will enter the market. So, dear friend, guys, boys, girls, ladies, gentlemen, everyone, please keep that as a rule. That's how the market moves. Keep that in mind. Okay, so considering that the price still hovering around this support, tomorrow by the London Open, we're going to have 2 4-hour candles formed here. If we don't see the price moving away from the support, most likely we're going to see a breakthrough. And the next area of support, it's around 1.26, and it's a very strong area. Write it down, mark it on your chart, and from this support, maybe we're going to see some solid moves to the upside. Now, in case the price moves upwards and finds real support at this area, there is a strong area of resistance right here. Mark it on your chart, around 1.27600. There is a strong area of resistance, and maybe we're going to see some kind of reaction. I'm not saying that the market will decline in a downtrend, because the market currently is not in a downtrend. So we cannot interpret any information so far that the market is going to create a downtrend. First, we have to see a lower than this low here at point A, and then we will talk about downtrend. Okay, be very careful while you read the market, because it's the number one factor why traders, most of the times, they don't understand what direction they have to trade. Okay, so that's for the pound. The next one, USD JPY. Actually, that one was one of the prominent currency pairs for last week, because the interest rates in the US remained the same at 5.5% last week, and the Bank of Japan kept the interest rate at 0%, so 0.1%. So what's the chances of this market not to be bullish, not to be on demand? And I remember last week we marked this bullish engulfing order block here, and we said, guys, if the price will come to retest this one here, you can go to any lower time frame and get the entries. So that's the 30-minute chart. What happened here? The price moved with these large bearish candles, and for about 3 hours, 4 hours, the price was just moving sideways just above this support. That means that most likely it's gonna shoot to the upside even for a retracement. Okay, and that was pretty much enough to capitalize on that move. What do we expect to happen from next week is, if the price will maintain this higher high and higher lows, then we will see a new higher high. And the next area of resistance, of course, it's going to be the all-time high right up here. Guys, say something. Do you understand what we are saying here? And to be honest, this one, it's not the most clear. It doesn't have that much of clarity as other markets. Okay, so I wouldn't pay attention too much on this one here. Next one, Australian dollar, US dollar. So on Wednesday, yeah, I think it's on Wednesday or Tuesday, the Reserve Bank of Australia will report their interest rates, and they are also expecting to keep them at 4.35%. Okay, unchanged. So if this is going to happen, we will expect the Australian dollar to move upwards. Now, because the analysis I give you here and I do for you on this webinar, I don't just do it for the sake of tell you something. It's what I also trade. Currently, actually last Friday, when I saw this this bullish order block here and the price found support, I entered long on this trade. So I'm still holding a trade on the Australian dollar, US dollar over the weekend. So what am I going to do? if the market will move upwards within the next 2 4-hour periods, then I will stick with the trade. But if the market will just stay sideways and I don't see green candles to move away from each other, I will definitely scratch the trade, because I like to listen to the market. I like to listen to the pulse of the market. If at support you don't see green candles, and you don't see each candle to have a high higher than the previous one and a low higher than the previous low, it looks like that the bullish pressure, the buying momentum is not building in that market. So it looks like that as retail traders, we won't see the momentum we want to see in order for the price to be pushed upwards. Therefore, we can just scratch the trade. We can just call it as okay, market didn't move, and we can look for the next one. All right. We don't need to demand every single trade to give us what we want to experience. Okay, guys? That's something you have to accept in trading. So Mirza said yes. Dilu said yes. Theo, gold is nicely going for waterfall. Dilu, that's what Dilu said. Zoom user said hello. Maybe you can show on Bitcoin USD something. Of course, Bitcoin USD, it's on our watch list, so we will see that. But guys, I just keep an order. I start with the majors and then I will go to the rest, but thank you for mentioning them. Next one, USD Swissy. Where is USD Swissy? Here it is. The Swiss franc, guys, was one of the strongest currencies in general the last few weeks, 3 weeks actually. And even though the US dollar was a strong currency, it couldn't overcome the strength of the Swissy. That's why the market is still in a downtrend. Next week, on Thursday again, the Switzerland National Bank will report their interest rates. They also keen to keep them unchanged. I think it's 1.25 or 75. I don't remember. By the way, all the fundamental news I'm explaining, I don't have a calendar in front of me. I just read them earlier because I made the reports for the prop firms tomorrow. So if the market will get strengthened, we're going to see some more continuation to the downside. Okay, so it's going to be a good to keep it on our watch list. If the price penetrates the S1 support at some point, it's going to give us the reversal to go short and continue going short and sell this this market. All right. Next one, I would like to show you the gold. Yes, of course, gold. Here it is. And after this, we will examine what's going on with the Bitcoin. Oh, so guys, any questions? More questions, please write them on the box below. Gold. Let's start from the weekly chart. Last week, we said bearish engulfing on the gold. But do you remember what else we said last week? We said that here it's a support. So this might be a solid bearish engulfing, and we do expect that the price will move, away from the support. But first, we have to do what, guys? We have to just sit patient and wait for the price to penetrate the support, to go through the support, and then to start looking for entries. But unfortunately, many traders, they have what my mentor used to tell me in Australia, itchy finger. They have their index finger and it's very itchy. They cannot get their finger away from the left button of the mouse. So they want to just desperately press the button because they are scared of missing out of any trade. Okay, but I'm telling you, you must Get skillful in patience, and you're going to make this trader. Last week, the price didn't manage to break through the support. So technically, we are still in a downtrend because this high and this low here, price is somewhere here around the moving averages. But again, we need some clarity. The market now, it's not that clear. What if the price will move away? Now we have a resistance. If the price will move away from the resistance, mark this on your chart. There is an order block right here. This order block, which will host many, it's going to host many buying orders here. Okay, maybe we will see the sellers taking over from this one. But again, if the price will close above this 2,340 on average, we can say that comfortably we can go to the lower time frames or to the 4-hour chart and find a way to trade it all the way to this area. Okay, now learn to be a sniper in trading. Learn to act instead of react. Okay, and you're going to do it great. What if the price will break above this area? Then we're going to continue buying the market until this highs here. That's easy. If the price will just remain down here, we can just look for another instrument, for another currency pair to trade. Okay, guys, so this is, we trade what we understand that makes sense, and we have a way to trade it. And when something does not make sense, we just leave it and we move on to the next one. All right, is that clear? I think it's good time to check the BTC US dollar. Okay. By the way, this is the analysis I will send on Monday to a prop firm. So I just have everything set up and I don't want to delete them. Sorry. So I will explain you exactly what's going on with the Bitcoin. So let's start with the weekly chart first. On the weekly chart, guys, the Bitcoin, just focus on the major picture. The Bitcoin is at this resistance, double top, but it is also within the context of an uptrend. It is still in an uptrend. Okay, it's not in a downtrend on the major, on the primary trend. It's in an uptrend. It's not a downtrend. What we want to understand is what's going on in the last few weeks. The last few weeks, and especially last week, the price created this bearish candle right here. But also, it didn't create any significant move, if you prefer it. So that's the only information we can extract from the weekly chart. And we don't need to do complexities here. We don't need to go for complicated stuff. And on this webinar, actually, while we're going to do this, I will also explain you something very important that you really need. I'm sure you are experiencing so far, and that's what confuses many traders. On this 4-hour time frame, we see the price makes lower highs and lower lows, right? Do you guys see that? Are you guys with me? Do you see what I'm showing here? Price makes lower highs and lower lows. So what do we expect to happen? First, what do we do not expect to happen? When the price makes lower highs and lower lows, we do not expect to see higher highs and higher lows. We do expect to see continuation, lower highs and lower lows. But this is not happening all the time. And I understand it. And understand that you are thinking, now the price moves upwards here and maybe it's going to move like this. But we do have these areas that we call resistance, and they are useful to protect us upon price rejections at these areas. If you are long here because you believe that the Bitcoin is going to rally, regardless there is lower highs and lower lows here, then you have to understand that around this area of resistance, maybe you can secure some profits. And if the price will penetrate that one, maybe at this downward channel trend line to secure some profits, or if the price will go all the way to the previous week's high to just see what you're going to do with to take some profits out of the table. Okay, but the most important thing to understand is if you are trading what you see on this time frame, there is no need to go to another time frame and try to find something different to trade. There are many times that the time frame you are taking the trades on, you are executing the trade, does not have clarity, and that's okay. We're going to move to another market. But if we constantly flipping between the 4 hour, the 1 hour, the 30 minutes, the 5 minutes, the 1 minute chart, the 15-minute chart, and trying to find trends and trades to trade, we're going to find ourselves sooner or later being confused. And we don't want to be confused. We want to have clarity in market. So what I will encourage you to do, and that's what I do personally, I don't flip around and mark around with different time frames. I have the weekly chart that I just look what I show you, the price action, and if there is an information there, I will take it, but most of the times it's just the price action. And then I look the 4 hour chart or the 1 hour chart just to take the trade, and that's all. I keep things simple, and I trade with the trend. I wait for the price. Do you think that, for example, in this case here, I wouldn't wishing to be part of this trend? Of course I will be wishing to be part of this trend, but was it I part of this trend? No, of course not, because I didn't know that this move will occur. Okay, and nobody knew that this move will occur, but I was very sure that if the price is going to come right here, with any way, regardless it came with this bullish candle, it was news. Okay, the news, they're going to just push the price faster in the direction it wants to go. So I knew that this order block here, within this swing, lower highs and lower lows, within this downtrend now on the 4 hour time frame, will have been a good area to enter the trade short. Okay, so and just to be very honest, did I take this trade? No, because I avoid trading intraday stuff on cryptocurrencies. That's personal preferences, because I have a lot of currency pairs and indices that I trade for years, and with cryptocurrencies I just trying to primarily buy and hold. So, but this example, it's everywhere. It happens in all time frames. It happens in all markets. It happens in all in every instrument. So it's exactly what. And then I see traders, once they see these moves here, they start going long. But the trend is down. Why do you expect that because the price came with this bullish candle here, it's going to continue to penetrate the resistance? If it was at support and the resistance was up here, yes, we will have expect that it's going to continue. Absolutely, of course. But the fact that the price was in a downtrend, lower highs and lower lows, as you see, if you don't know what is a downtrend, tell me and I will explain you. And then we have this reference as an area of resistance. It makes it a lucrative area to look for shorts. The price, again, when you see retracements, the price can retrace in any kind of structure, of shape, or all this stuff, okay? And you don't need to understand or to find the reason why the price moved to that level in that way. That's irrelevant. We want to see what it's going to happen once the price is at this level. Okay, just think, for example, and you can keep that as a good example, actually. Imagine that a resistance level, it is the red traffic light, okay? It's the traffic light. And imagine that you are driving, if you are driving with 60 kilometers an hour, and at some point you speed up to 80 kilometers an hour, okay? And you see from a distance that the traffic light, it's changing from green to red. What you gonna do? You're gonna just press the brakes and stop the car, right? Under normal conditions. Okay. Some people maybe they will tell me, Theo, I'll just go straight, mate. No, okay, please don't do that. Don't do that on the streets. Do it on a video game. It's okay. All right. And I'm sure you understand what I mean. Okay, yeah, I like to do some kind of smart jokes here, but okay. I hope you are laughing a little bit, because I want to make them engage in these webinars, because I'm the only one that talks here. So I want you to feel also comfortable behind your computers. And that's how we see the resistance. So the way the price arrive at resistance, it's irrelevant. Okay, now some questions here. Is it possible? So support, is it possible to see something with time zones? What do you mean? Sorry, your name appears as Zoom user. So can you please explain? Laxmikan said, can you tell us what conditions you must exit any trade? If I enter here with this bullish engulfing and the price arises at this area of resistance, here I will be out of the trade. At resistance, if I buy at resistance, I'm out. If I sell at support, I'm out. Simple as that. Alena asked, what is the interpretation of the death cross? The death cross is when the 50 period moving average crosses below the 200 period moving average, but the 50 period, it must come from above to cross below. And it's the indication that the market is in a downtrend. So we call death cross when the two strong moving averages, they indicate a downtrend, and we call a golden cross when the 50 will cross above the 200 period. And it refers to an uptrend. Diamond said, what is the order block? Guys, the order block, it's one of the most powerful information we get in trading. Let me show you with this one here. Actually, let's just cut the, let's do this one. So what is an order block? An order block, it's an air. Do you guys want me to explain what is an order block? Come on, just let me know, because I think many of you are curious, or you don't know, or you heard it, or you read it and you are not sure, because really it's relevant for your, okay, yes, 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 please do, yes, please, yes, okay, perfect. So an order block, it's a combination of orders. That's why it says, the word says a block. So it's a block of orders. Guys, on every, let's zoom in a little bit. So on every price level, there are buy and sell orders at the same time. And these buy and sell orders, always they have duration as much as the time frame. So in other words, we can say that the time frame represents the amount of time the buy and sell orders interact with each other. Some people they buy, some people they sell, and for these 4 hours, the net sum or the sum of buy and sell orders occur here, it shows that the buy orders were significantly more than the sell orders, and that's the reason the price from here, from point 1, it closed higher at point 2. And with a candle, it represents with this green color candle. Okay, are you with me so far? Do you guys understand it? I think that's simple so far. Yeah, let's continue. Next one. If after a bullish candle we see a bearish candle that reverses 100% of all the buy orders created at this point here, and we will see a bearish engulfing pattern. That's what called a bearish engulfing pattern, is the combination of two candles that the second candle will engulf the whole range of the previous candle, not only its body, but its high and its low. Doesn't matter if it's going to engulf it with its body, but in a total length. Okay, we call this as a bearish engulfing. Are you guys okay so far? Does it make sense? First, we have to understand the bearish engulfing. Now, if this bearish engulfing will force the price to move downward, and if it will create a new lower low, let's say this is the low here, that's the high, that's the other high. So if the price, because of this bearish engulfing, breaks this low here and creates a lower low, then we go back and we mark the origin of this move, where this move started from. We marked it and we name it as the bearish engulfing order block. Okay, there are different kind of order blocks, but the most prominent in trading, I found them to be either the bearish engulfings or the bullish engulfings, if you reverse the roles, or those with the long upper wicks or with the long lower wicks. Okay, so usually you're gonna find them, usually they're gonna be the beginning of an impulsive move. Usually they will create a directional bias in the market. Okay, and it's exactly what happens here. So, for example, why I mark this as the bearish engulfing order block? First, I find out that that was a bearish engulfing. And then I saw that this bearish engulfing here was the cause for the low here to create a new market structure. So it broke under this low here. So this fresh move started at this point here, and that's what I defined as the bearish engulfing order block. And because I found it on the 4-hour time frame, I named it as a 4-hour bearish engulfing order block. Okay. David asked, and what about the imbalance concept? Does it have a direct relation with the order blocks? Diane said, thank you, you're very welcome. The imbalance means lack of balance. Imagine that there are buy and sell orders. They are happening all the time, buy and sell orders. When the sell orders overcome the buy orders, we have an imbalance between buy and sellers. Okay, that's the concept of imbalance. Now, if the price it's gonna just move directionally in one side, and you're gonna see this fair value price like this one here, and I know some people, they call these areas imbalances and all this stuff. Anyway, I don't want to get into that. Everyone thinks and interpret things differently, but there are also some solid academic knowledge and things in markets which I just follow them, and yeah, that's all. But with the imbalances, I agree only to the concept that when the sellers overcome the buyers, then we have imbalance between buy and sell orders. If that answer your question, David. It looks like it's forming a bullish wedge. Yep, also bullish wedge. So, guys, any other questions? I don't see any other questions. I think we cover pretty much many things here. We didn't go through the crosses actually, and for those who Diamond asked, what is the fair value gap? Will you explain us? I will leave that for next week if you don't mind, because I want to give you just a few other currency pairs, if that's okay, to keep you on your watch list. Next week, sorry, previous week, I remember we talked about the Euro New Zealand, and I told you that we're going to look to buy this one and because of this price action, but the market didn't give us any entry on the 4-hour chart. We were here and we said, okay, market made higher high. If it's going to come down somewhere here and it's going to give us a reversal price action, we buy. It didn't give us anything. Instead, it just moved lower and lower. With the only reversal price action bearish engulfing, it was this one here, but I didn't get involved, to be honest, with this one, bearish engulfing. And it was a good one to take it, but I just didn't take it. Okay. That's pretty much that's it. And the main reason I didn't take it is because I primarily look my trading activities primarily during the New York trading sessions, because in the mornings I'm more busy with other relating trading stuff, with analysis and all this. So the other currency pair we talked about was the Australian dollar, Canadian dollar. My goodness, that gives me a headache. The weekly chart, the price, it's at a significant level of resistance. Do you see that? 1, 2, 3 weeks, 4 weeks is trying to break above this resistance or to decline. Now, at this point here, I'm not betting anymore to the short side, regardless of this rejection, because the fundamentals, they support more strength on the Australian dollar. And guys, at resistance, if the market, and I will leave you with this, at resistance, if the market does not sell off and move away quite fast, it means that most likely it's going to reverse. Okay. And I think that's the occasion here. So the most prominent price action here, it was this one, to be honest. This one. The price last week didn't move to the downside. So we're going to expect that this week it's going to move to the upside. How can we trade it now? That's the question. The question is to understand how can we take advantage of that. Well, price made higher highs on the 4-hour time frame. If you want to trade on the 4-hour time frame, you have a full-time job and perhaps you don't have time to look at the charts all day long and you just want to look them a few times per day, and you are watching the 4-hour charts, you can find, let's say, at this support here, if the price declines further, a reversal price action, bullish engulfing, or this with a long wick. And you can just take the trade, guys. Okay, simple stuff. Or if the price, let me show you this one. Now the market created a trend line here. Yeah. So if the price will, here is a trend line. So if the price will break above the trend line, at some point it's going to reverse and it's going to give us a good entry to go long. So that's another way to trade. That's how I trade. Simple stuff. Okay. Only these two ways. So I think Caramba said, sir, please can we get the video to rewatch? Absolutely. Actually, if you go on Elevating Forex YouTube channel, you're going to find the video there because it's live on YouTube now. And once I And the webinar, it's going to just be available to rewatch it as many times as you want. So guys, I think that's all from me today. I hope you really had a great time here at the webinar. And if you suggest anything for improvement, please send us some messages at support. I'm not the one that received the messages, so just say whatever you want. Okay. But I like to hear if you have any tips, if you want perhaps to listen to watch something more, or if you think there are some things we can do to improve the webinar. I'll try to make them as much engaged as possible, so you feel nice behind your computer. So you're very welcome. Now, enough said. I want to wish to everyone to have a fantastic week ahead. Happy trading. And of course, if you need anything, send a message at support. And myself, the Elevating Forex team, would like to wish you to have a lovely evening. And I will see you all, of course, next Sunday at the same time. Thank you, dear friends. Thank you, everyone. And bye for now.